So, Logan, I got to ask you. So, month over month, sequentially, the sales dropped by about 6%. But we have so much economic anxiety. Is that like a warning sign, or is that to be expected?
Really, the existing home sales data is slightly old now. Our weekly pending contracts for the last 4 to 5 weeks have actually shown positive year-over-year data. Purchase application data this year, it's rare to say this, it's been a while, is actually positive year to date and positive year over year. This with rates being elevated. This is why I found the housing market very encouraging, that even with elevated rates, inventory is growing, price growth is cooling down. We just had rates spike up back up again recently due to the volatility. But if mortgage rates could just head down towards 6%, 100% confident that we could get sales to grow this year. We are working from the lowest bar ever, and especially purchase application data. The last time it was this low was the 1990s. No doubt was the #1 band back then.
But Logan, by the way, if we're going to wish rates go down, let's get them down like 3. Why would we just wish for 6? Let's just be for real.
3, 3, 4, 5 is difficult with monetary policy. The honest truth is monetary policy is not really set for housing to grow. We see this with starts and permits, but it is encouraging to see the data get somewhat better on a year-over-year basis, even with elevated rates.
So you're saying this is old data, which economic reports generally are. They're backwards looking. You're saying the picture currently is a bit different. So I do want to ask you this. Now, me and the team were talking about this earlier, and I was asking them, isn't this good? So inventory for existing homes is up 20% year over year. And as you mentioned, the price growth is slowing down. The prices are still going up, but it's slowing down significantly. Isn't this good? Isn't this what everybody wants?
It is 100% positive. That's how people should look at the housing market. If inventory was still very low, like we saw during the COVID years, and price growth was accelerating above the growth rate of inflation, that is a terrible, unhealthy, savagely unhealthy housing market. So what we're seeing now, and especially last year and this year, are things that will set up a better housing market in the future. More inventory, more choices, price growth slowing down, all positives for the housing market, very similar to what we've seen in previous decades. If the economy does go into the recession, the backdrop is better right now for housing.
All right, so we bounce off of our low when it comes to the housing market. It sounds like, at least temporarily, things are improving a bit. So some of these reports where it's like worse since 2009, it's not really capturing the current environment. So one more question for you. First-time buyers at 32%, same level as last year, but historically that's been about 40%. Investors as buyers at 15%. What does that tell us about the housing market? By the way, that stayed steady year over year as well.
I mean, the millennials are still a massive generation. Gen Zs, the elderly ones, are still buying homes. So when mortgage demand picks up, first-time home buyer does pick up. So rates are a little bit lower this year than last year. So the first-time home buyers should pick up a little bit more. They finance 90% of their home purchases. So if rates just go a little bit lower towards 6%, the millennials will recapture their #1 ranking as the biggest home buyers in America.